Alrighty, good day everyone. Good morning, good afternoon, good evening. Hope everyone is well. Alrighty, good day everyone. Quick sound check. Sounds like I'm coming through okay. Hope everyone is well. Don't forget to check out the standard disclaimer. G'day Census, Justin, Alistair, nice to see you all. Still got a few people coming, it looks like. So don't forget, g'day Bluefin, Howard. Hope everyone is well. Hope everyone kept their powder dry overnight. As expected, we had some quiet price action, didn't we? So kind of makes us realise that we have to be very careful. Markets had a big move. Often there's that pause time, and that's the time where you can get chopped up. So folks, let's jump in. So everything we talk about is for educational purposes only, and you are responsible for your own trading decisions, and as such, by continuing to view this presentation, you agree to those conditions. So welcome to Workshop Wednesday. That's a familiar saying, isn't it? So today we're going to look at setting the stage part 2. Now, we are going right from the beginning, but I think you'll find when we expand on a lot of these topics, even though you think, look, I've made these before, I've seen these before, or I'm aware of this, I will expand on these a little bit further. And if we get time at the end, we'll have a quick look at the watch list as well. So, what will we learn? What will we look at, and what will we learn today? So, top trading mistakes. So what are the top trading mistakes in regards to execution? What are the top trading mistakes in regards to psychology? And what are the stages of a trader? In other words, let's have a look at the 4 stages of trader development. So the first one, top trader mistakes. So close to 90% of all traders lose money. That's a fact. The brokers will try and tell you it's 76%. What they're not telling you is the rest are probably break even, and the ones that do make money are in the 5%. Now, apologies again if you're getting that green flash or the pink flash. I'm sorry about that. I need to reboot. So the remaining 5-10% manage to either break even or turn a small profit. But more importantly, how do they do it consistently? So how do they do that? So that's the million dollar question. While there is no magic formula, no secret sauce that we spoke about the other day, there is, however, fundamental mistakes that prevent traders from being successful. This list, of course, is not by no means exhaustive, but contains some of the most common mistakes that traders make. And the winner is, number 1, no strategy or system. So how do we know if we've got edge? How do we have confidence in our system? We don't. Now, your strategy or system can be one setup, okay? But you need to know the context in which that appears. But if you have one setup and you know that, you've got confidence, that leads to competence. So, number 2, no methodology for analysing the markets. Okay, we might have a favourite setup, but how do we go about analysing the market? Do we need, extensive trading knowledge, chart reading skills? No, we don't. We just need to be able to read a chart properly. So they have no methodology. They're applying things here and there, overlaying, a huge amount of indicators. No real solid methodology. So if you can't analyse a chart properly, do you even know what constitutes a trend? let alone your entry signal or when to take that. So the third one is no trading plan or strict set of rules. So, without the old saying, without a plan, men fail. No plan, I've forgotten the exact saying. You plan to fail, I think, is it, isn't it? So no strict set of rules that you analyse a market. No strict set of rules for your setup. No strict set of rules to manage your mind. So how do you, I mean, with the trading plan, you know, how do you define your trading functions? So if you fail to plan, of course, you plan to fail now. So not getting an education. Right? Now, when we say not getting an education, this is probably right up there too under no strategy or system. This probably should be number 2. So could you imagine any other field, as we spoke about before, 3-4 year degree, could you imagine not getting that education in any other field? You're just not going to survive, are you? So when we say an education, we're not talking about, you know, weekends, you know, a weekend trading course. We're talking about, you know, reasonably extensive education, applying your knowledge. And of course, traders have unrealistic expectations of what they can make. So I often say that after testing your system, you know, perhaps having a mentor to shortcut the process, when you go live, if you break even or eke out a small profit in your first year, you've done well. Okay, so a lot of people can't accept that, and of course, overcomplicating it. It's one of the big mistakes. So we're overlaying things to try and basically create certainty where there is none. So another one is lack of discipline. So you've outlined your strategy, your methodology. You've now got to develop that discipline to follow it to the letter. And it doesn't come easy. It doesn't come straight off. G'day, Greg. So lack of patience. Right? Now, markets only trend 20% of the time. So we have to have the patience to wait for those times when the market is trending and is setting up in our favour, but be able to wait patiently when it's not. Now, you've heard me often talk about, and I know it's Howard's favourite saying, where profits come in bunches, which they do. We saw last week, we had trades on pound yen, trades on euro dollar, trades long on dollar pairs. So there was easily 3 or 4 good setups, but since then, the market's just digesting that move. So it's not how much you make when the markets are favourable, it's how much you make, how much you don't give back when the markets are not conducive. Now we saw, the last couple of days, and I said yesterday, there's really only one that I like, and even Howard was onto it, WTI. Didn't move a huge amount, but it was about the only one that I did actually like. So lack of patience. So what this does, of course, is lead to over trading. Right? If you don't have that patience, over trading, there's also this feeling that as traders, we have to be doing something. Well, no, the execution part of trading is just one part. The rest of it, is reviewing, studying up, going back over your sessions, updating your cycle routines, all of that sort of thing. Execution is just one part. So over trading just leads most of the time to taking, suboptimal trades. So one of the ways that I overcome this is to always remind myself that, there's always going to be another trade. So here's a good one. I desire to trade everything. Trading this, trading that, doing this. Well, no. How do you specialise? As we spoke about in previous part 1, how do you specialise when you want to trade everything? Yes, setups are similar and context is very similar, but you can't be sharing your focus over everything. Those of you know the way that I trade in the morning here. It's 5 p.m. my time here, or 5:13 p.m. I trade in the morning for a couple of hours. I have lunch, I go to the gym, I come back when the market closes. So I'm not trading, even though I'm doing trading activities and other things, I'm not performing the function of trading for 8-10 hours a day. It usually is about 2 to 3. So what this also does is just really dilute your edge, because you never really get that opportunity to specialise or learn the character of one market. So lack of money management, this is a big one, big mistake. Right? Whether you use fixed fractional or fixed risk like I do, you have to have some money management. Some of this is a huge topic in itself, but some of the mistakes here, g'day Safe, some of the mistakes here basically too large a position, you can't handle the drawdown, you didn't realise what the drawdown was going to be, no stop loss, too much portfolio heat. In other words, you put 10 positions on and you don't realise that you're at 2.5-3% each position. If all of those go against you, you're looking at a 25 to 30% portfolio drawdown. Yeah, that's quite a bit. That also leads into over leveraging, having too big a position for your account, choosing the wrong time frame. This is a huge mistake. Trying to trade on smaller time frames, placing 15 trades in an hour. Yes, some can do that. I can do that at times, but my psychology's got to be right. I've got to be very focused, and the market has to be giving. So what are some of the others? Here's a good one. Hoping a bad trade recovers. So this is where a lot of you have heard me say you have to rewire your mind to think in order of what is opposite of what is natural. So I'll try and do more on this later, and a few of you know what I'm talking about here, but we have to flip hope and fear. So we're not naturally hardwired to trade, so we have to rewire. One of those is not hoping a bad trade recovers, but fearing that this will turn into a bigger loser and cutting it. Exiting winning trades too soon. So this comes from, we've spoken about the fear of giving back, but this is also a fear of giving back too many profits. So rather than hope this becomes a bigger trade, a better trade, we exit it as soon as we're in small profit. So, what is in our trading plan in terms of exiting? Well, that's one way around that. So what is our, trade management strategy? Trading too big too soon. There's an old saying, earn the right to trade bigger. Right? So if you're starting to be consistent and you're trying to double the position size every week, it's too much. It doesn't allow for you to go through those drawdown periods and accept those. So what this does also is not allow the trader to train their mental muscle. Right? We've got to get used to trading a certain size. And getting used to that size, it's like being in the gym. You're used to that, now it becomes easy. So you gradually increase the weight. Same it is with trading. Trading both sides of the trade. Right? Traders think that they can catch every small change in momentum, but if you're not good at counter trend, leave it alone. The reality is that often you can't trade both sides of the trade. Trading for the thrill of it. Okay, so good trading is boring. Right? Good trading shouldn't be thrilling. Good trading is about sticking to your rules and basically just grunt work. Okay, same thing over and over again. Just because the market is open doesn't mean that there will be high probability trades either. All right, so let's have a look at the 4 stages of a trader. So this is not, of course, limited to trading. This is in anything. The 4 stages of whatever you want to call it. So let's have a look at these in detail and see how it relates to trading. So the very first one is unconscious competence. And I'll go into these in a bit more detail. Number 2, conscious incompetence. So then we have the light bulb or aha moment. Number 3 is conscious competence. And number 4 is unconscious competence. So part of the key is to know which stage you're in. So let's have a look at these in detail. Number 1, unconscious competence. Let's put this a different way. The trader knows nothing and doesn't know that he doesn't know anything. So we can often call this also too, beginner's luck, where there's some initial success, and often due to the fact that one tends to trade better when they're not afraid. Okay? Yeah, the stop's just swinging nowhere, or it's miles out the way or something. So they're not afraid. They're going into this green. Right? This is a valid phenomenon. Right? But it tends to be short-lived. So unconscious incompetence. In other words, we're incompetent, but we're not aware of it. The trader also thinks, well, how hard can this be? The trader acts on impulse, and he ultimately loses money. As we said before, he may have some initial success. He doesn't see the need for education because things are ticking along. As we said, has some success, but ultimately he's going to be acting on impulse and losing money. Number 2, conscious incompetence. Right? So this is where the trader realises that they are incompetent. They know they're missing pieces of the puzzle. There's more to it, but they don't know where to look. So this usually comes after some costly mistakes or blown accounts, and usually a lot of frustration. This is where a lot of traders stay. And unless they're humble enough to admit this to themselves, they really will not move forward, and often they stagnate in this area. So the trader, during this area, the trader tries all different types of systems, indicators and the like, looking for the holy grail that we spoke about. So the trader also creates unnecessary complexity without a real workable trading plan. This phase, interestingly enough, can last 1 to 3 years. Well, that's a long time to be banging your head against a brick wall. The remaining trade. So during this time, obviously, so desperation can also set in, resulting in risky decisions because they're getting desperate to make it. So after this time, the remaining traders may in time be able to move to the next phase. Otherwise, a lot give up during this time. And you've heard me talk about traders often give up simply because they don't know where to move on, where to move to. So one of those is seeking out a mentor, as we spoke about. So the 4 stages, then comes the light bulb. This is a point where the traders, at this point, the traders move to a point where he now can truly move forward. In other words, there's more to it, I need more. So new truths have been established. New truths have been established within about the markets and themselves. They now realise there's more to it. Trader realises it's not the system that will make the difference. He's obviously realised by this time now it's his application of a particular system that is leading to his bad decision making. He's not disciplined. So new truths are established within, right? System, he can pick a system, he's probably onto something that he feels is right, but he realises now that, it's actually application of that system. So these new truths are established. So he realises that they're distractions. He doesn't have a need for any of these distractions anymore. So he reduces all of this distractions and noise. Remember we spoke about in part 1 what the weapons of mass distraction were. So he eliminates these, or he minimises the distractions and noise. A proper focus is applied to one method, one strategy, one setup, one time frame. He's also applying good money management, to learn about money management. So that's proper focus. His thinking now changes to a series of trades perspective. In other words, he's not getting angry at one single trade. He realises that this is all part of it. And of course, to sum it up, he realises it's all about the discipline application of his edge. Okay, so now we move into the conscious competence stage. In other words, he's aware of his competence. So what's he doing? He's taking trades as his methodology dictates. He's being very disciplined. He's working hard to find and take the best trades. He's standing aside. He's managing his trades properly. Well, he's trying to cut the trades when they're not going properly. Yes, Howard. Howard says he can relate to that 1 to 3 year. So he's managing the winning trades properly. He's cutting his losers. He's being diligent in his processes. He's using his journals. And he's tracing his edge. And he's beginning to make some consistent profits. Well, then we move to stage 4, unconscious competence, where you just do the same thing over and over. You're unaware of your need to kind of improve. So what's happened in this stage, the traders learn so much about themselves and the market. Right? The trader has gratitude for the opportunity and savours the journey. We spoke about that before with Steve Jobs. He said, enjoy the journey. Yeah, very good, Justin. Yeah, you are. So the traders simplified a method that truly resonates and suits their personality. Right? A few of you have gotten to this stage. I know a few of you personally. But not only have they found a method that resonates and suits, they've simplified that. They've drilled it down. Trading is easy, almost boring at times. Yeah, today was an easy day, so I went out with a lady friend for the afternoon, so that was good. I'd done my sort of work in the morning, had the opportunity, so I went out. Had to come back, of course, for the stream. So I get my priorities right. And emotions have been mastered. Right? Now, we're constantly working with this phase as well, but emotions have been mastered to the point where they're now showing competence in their psychology. Right? So there's a difference of competence in finding trades, finding good setups, proving it up, but then there comes a competence now in mastering your emotions. As we said before, the trader has gratitude for the opportunity and savours the journey. So increasing consistent profits are a reality. The trader is humble and respectful to the markets. So that's a big one, isn't it? Humble and respectful to the market. Some of you have often heard me say, the moment we think we know it all is when the market really pays us that knockout. Well, not the knockout blow, but a decent blow, isn't it? So in summary, what have we learned? We learned about the top trading mistakes. We learned about top trading mistakes in regards to execution, top trading mistakes in regards to psychology. We learned about the stages of a trader, and in particular, the 4 stages of trader development. So folks, let me hand it back to you now for any quick questions. Any quick questions, folks? While we're doing that, let me just transition over. Any questions, folks? How many of you sat on your hands the last couple of days? Safe. So Safe says, I don't know yet. I'm in which one of the 4 stages. Okay. Watch the replay again. Safe, I know there's a bit to take in. Watch the replay again and just see where you believe you fit in there, where you think that you fit. Probably a good idea. Yeah, very good, Justin. Justin says gave himself an early mark last night. Yes, you got to know when to kick back, when to step out. Now, all right, let's have a quick look, folks. We've got a few minutes. S&P 500. We spoke about this yesterday. We spoke about this right around here. Said that I expected a pullback. Magnitude of, we're not sure, but I suggested it was around probable stage wave 4 in here. So that's the first part. Now, the other thing is, if I've gotten my count wrong, which I don't think I have, the last thing I want to see is it back here. Larger 1, larger 2. I expect this is 5 and 3, looking for 4 here, okay? So 4, I'm looking for within 40, 60. Now this is 3 of a larger 1. Some of you will know that 2 can actually be deep. All right? Now I'm sorry if that sounds like a whole heap of gobbledygook, but it's basically just this downtrend. Often wave 1, wave 2 is often deep. Right? So we've still got 5 waves in here, but these initial moves from lows can do that. Right? So there's the 40-60 box, right in there. Previous wave 4, right at the base channel, right the top of the base channel, but still got the base channel through here. So see it there. I know it's pretty light, so there it is there. We've got the center line as well that this can bounce from. That would still put it in the 40-60 box here, wouldn't it? All right, so that's what I'm looking at. Obviously, I'd like it to bounce from here, right? But we may not. So we can already see. Remember yesterday we said about this? It's probably third wave price action. This looks like first. This looks like 1, 2, 3, 4. So looking for 5. Now, if that's the case, this is going to be 5 of A, isn't it? So then we're probably going to get B, and then we're going to get C is going to be lower. How much lower? We're not sure. So let's have a look at 1 right here. Let's get rid of that. Projected from 4, and I want to see where this comes in. Okay, so we've got wave 5 equals wave 1 right here. See there at 100. Can also be down as far as here. So that's what I'm looking at in that regard here. We did say about this being steep, didn't we? All right. Now I think one of you I think is short S&P 500 options. So I hope you're still on that if you're listening, which would be a massive trade. Well done. So in here, want to see those 5 waves down. Now don't forget too, if we do get A, B here, the other one here can be shallow and still be C. Right? Okay, yeah, AJ, yes. All right, so that's what I'm seeing. Got to wait this out and see how we go. So we spoke about the VIX. We saw this early. There's no change in this. So I have to go with that risk off, folks. Right, neutral to risk off. We'll put it down at risk off. Right, so we've kind of transitioned out, and now we've got a bit of a direction. So we really are risk off. So you could probably go, excuse me, back to 100% risk if you wanted. But I'm going to stay just a little bit cautious. All right. So what am I seeing? Longs, CAD Swiss. Okay, Swiss weekly. Bit of a spring through here. Big V reversal was on the weekly chart. Nice move out of this. Right, we just got a big complex pullback in here, back to the 200. Where's the weekly anchor? It's right here. So we haven't broken the weekly anchor yet. We certainly haven't. We haven't broke. Or have we? Yeah, we'd have to say here. So did we return to downtrend? No, because it's right there. So we're still uptrending. Where's the anchor? It's right here. Is it any wonder? Is it any wonder? Look, that we've had these rejections from here. The importance of these trend anchors, folks. Right? The importance of learning the trend anchors. Right? So I'm just looking for a bounce from here. That's all. Weekly, daily. So there's that move. We can see through here. Just a shake out through the lows. Where's the anchor? It's right here. Right, so we broke under the 200. We've been respecting it. You can't say it doesn't respect the 200 period moving average. Look at it here. Bang its head on it. Now it's through. So we got an uptrend here. Yeah, I would, unless this rejects hard today, I would have to say yes, we got price acceptance. Nice move from the low move. So have we done measured move already? Maybe. So basically what I'm looking at here is just for this to continue. We're reasonably sort of clear up to this point on the daily. Let's drill down to the 4 hour. There we go. All right, so the trend line, you saw me draw that. Look, we're right at it. Okay, so it's pulled up right at it, as well as the 200 on the 4 hour. So this sort of structure, we're going to have V reversal here. Accumulation here, got the nice pop here. So I'd want to see some sort of move up and maybe use the 200 and get that squeeze play and enter in here. Right, like we had on dollar yen. So that's what I'm looking at. Still a little way off, but it's okay. It's kind of reasonable there. Right, we get through that. We've got a little bit of room through here. Okay, WTI. We spoke about this yesterday. Was probably the pick. Right, break of the wedge. Nice push here. So we actually got this 4 hour anchor. Well, it's kind of milling around. Then we had price acceptance through there. We had the trend line break right here. Did anyone get anything in there? Right, so that was, we were looking for that yesterday, so we got that. Got that early. Anyone find anything in there? So here's the 60-minute. Right, look at the shakeout through here. We've actually got two of them, haven't we? Look. Wouldn't have been easy. Maybe through there. I didn't get it. Got this move here now as well. So back to the 20. This is not bad. Let's be mindful right there is the 200 on the 4 hour. See it there? So it could have just mill around. This getting a little vertical, a little quick. Still not bad. Shorter term, I would be probably more inclined to be looking at this in the interim. Okay, there's our 8 period. This will be a bit light, isn't it? All right, so There it is right there. So notice, I don't mind taking these first couple of trades, but the next one tends to pull back harder. I don't mind taking these where we get this early momentum coming. It's a little bit better on the daily. So just coming into some resistance there. So just be careful with this. My preference now would be to see maybe a pullback in here. Something set up there, or a pop through and then the breakout pullback. WTI. Well, but it's doing what we thought, which is good. Okay, pound dollar. So let's have a quick look at euro. Remember we said yesterday about euro potential just to pull back to the mean? Well, that's exactly what it did. Big move though, we need to let this digest. This, if anything, looks short-term long. But I'm not going to put that on. You'll see the power of the 20 period, moving average. It's a simple moving average, that's all it is. Nothing special about it, it's just a visual guide, folks. Okay, now, pound dollar. Right at support, potential false break, bullish outside engulfing bar. This one. Excuse me. I haven't got a huge amount of room here to the 8. All right. Let's have a look at the 4 hour. Go on. Price is pushed up. There's the anchor. So we've broken this. We spoke about this yesterday. Spoke about this in terms of short-term trades. So now we're coiling in around the 20. So this is pretty good. Let's have a look at what it looks like on the 1 hour. This is not bad. Look at the swings. Do we or do we not have ABC 1, 2 back to the 20? We do, don't we? So this is worth, is our channel, corrective channel. This is worth considering. Short term, there's B wave. See how price performs in around here. Above a rising 20. So that one I don't mind for shorter term trades. Yes, Alice there. The other one is pound New Zealand. So big push down the weekly, rejected in V reversal style. Move up, straight down. So we're getting that accumulation look on the right hand side of the V reversal, aren't we? When we look at it, yes, the 20's right here and it's down. So we kind of got a little bit of conflicting info here. So it's not an A grade from that point of view. But when we look at the 4 hour, we identified this yesterday too. Where's the anchor? It looks like it's here. We've got evidence that it's attempted to sort of pop, yes. Got that definite V reversal look. And then we've got a, look, wedging structure through here. I like this. We've got the break. There's the 4 hour anchor to this corrective. See there, we've got a little bit of throw under here as well. So there's the corrective anchor. Right at it. We're above the 20. This is not bad. So look for longs through here. See what the 60 minutes doing. 60-minute anchors here as well. And a nice push. Getting a nice sort of, you know, maybe we can go sideways, correct through time, bleed off a bit of extension and pop. That would be worthy of a pullback. Sorry, a breakout entry. If not, we might find that this actually starts to go already. So there's that first, all right, got the 20 here, got the 8 here. All right, so we can see you've got a little ABC in there as well. All right, so this might actually pop. We can see it's respecting this level. Oops. So there we go, folks. No, don't say it, folks. Margin call. So there we go, pound New Zealand. So there we go. That's what I'm seeing, folks. Not a lot. Well, there's some there. CAD Swiss long, counter trend longs, WTI, pound New Zealand, short New Zealand. Oh yeah, New Zealand CAD, sorry. Got ahead, didn't I? Thought I was let out early. Okay, we spoke about this one. Bearish engulfing on the weekly. Big sloppy corrective channel. V reversal. Sitting right at support again on the daily. Pull back up to the 8 period on the daily, making another move. So here's our ABC in here. It didn't trigger, and then it gave this shakeout afterwards. Look, anyone early would have gotten trapped. Here's the 20. Now we've had a go at that again. I don't know whether any of you got in there. Just be careful when it hits the low here. Otherwise, look for any other opportunity through here. So that one's following through. Just be careful though, folks. As we said, not a lot of other market movement. Markets may be waiting for Jackson Hole or something this week. I don't know. At the end of the day, it is what it is. So we just got to respect that and trade accordingly. Safe, sorry. So if you like New Zealand CAD, if you're in here, right, this large bar here, we shouldn't take that out of the 200, so probably up here. I think this is too far. If we get to this, it's kind of getting above the 20, isn't it? So I reckon that would be, that's still pretty big. I reckon that's probably 55. No, 40. Right, so there's not a huge amount of room down here. This was my concern with this one. So there we go, folks. Be good. Bit of movement on WTI. Oh, there is two. Well done, Senseless. So just remember, just keep your powder dry, folks. Excuse me if you're not comfortable. And I will see you all tomorrow. Excuse me, for Thursday live stream, same time. Take care, everyone, and talk to you soon. Bye for now.